In the month of October, we ended up just down on that October 31st. So it was a relatively volatile month. We had swings of 1% or more, both up and down, and we ended up just slightly down. However, we did hit all-time market highs in the Dow Jones and the S&P 500 within October. Your month-to-date and your year-to-dates are going to be rolling right here. Two notes kind of outside of the market. Your gold and silver continue to trend upward. There's a lot of sovereign funds buying up gold, especially right now. It is a store of wealth. So that has seen a tremendous jump in this year. And one note that where because of all-time high in S&P 500, we're up close to 23%. Gold and the S&P 500 have never been 25% or more, have never gained 25% or more in a single year. So it seems like that would probably remain true, but we're getting close. So that's fun to say. Number two, we saw Bitcoin back close to all-time highs. That is coming down. That remains a volatile market, but it is something to note in a relatively newsworthy month. A lot of the hesitancy from October is looking at November 8th, looking at Election Day, and that's our big or one of our two big keys looking at the rest of the year. So Election Day is coming up. Everyone should go out and vote and express your duty as an American citizen. But this firm believes that it's more perceived volatility than actual volatility. There's reasons within both the Trump and Harris campaigns that might really be good for the market. There's arguments for both. And we do want to note, especially because our firm likes to talk with you and join along with you in tax things, with your CPAs, with your accountants, with your tax attorneys. There might be some real shakeups coming up, depending on which side wins, depending on how House of Reps, Congress rolls. So we are going to be extremely mindful of that. There's nothing too much to talk about right now, and we want to see things play out. It's number one for the year. And number two, as usual, we're getting close to the end of the year. So we want to make sure our contributions are done. We also want to make sure, for those who need to be mindful of RMDs. RMDs are related to inherited accounts, or for those 72 and above with traditional IRAs, traditional 401ks. So those are the big things to look out. For the rest of this year, we probably see it flatlining, being close within margins with where we're at today, but nothing too crazy going on. Again, perceived risk within that election day. We look forward to seeing you in November.